you have got an investment management cohort, establishment, who just basically are an extension of government. It believes everything that government tells it. Government steers it. I mean, just look at mainstream media, for example. Any mainstream media which doesn't follow the government line, doesn't toe the government line, finds it's cut out of the loop. No editor can afford that. So it goes along with it. And it's far easier if you go along with it. If you're going to go along with it, just don't think it, don't overthink it, just go along with the government says. I mean, when I read a supposedly sensible broadsheet paper like the Daily Telegraph, that's absolutely full of stuff which is obviously fed to it by the Defense Department and by the security services. It's all complete nonsense.
Hey guys, welcome back to Capital Cosm. Today I've got Alasdair Macleod back on the show. Alasdair, thanks so much for coming back on, my friend.
Thank you very much for asking me.
Yeah, we're happy to have you on. And I'd like to remind you guys to look out for the Substack link in the description box below. We're going to have exclusive content for members only to the Substack that you're not going to be able to get, just by being a YouTube consumer part of that audience. So click the Substack down below. Explore what we anticipate rolling out. And Alasdair, let's just jump right in, my friend. Lots of things have transpired since we last spoke. It's been about 3 months. Where do you see the economy right now and the markets? In terms of like a 30,000 foot view, where are we right now?
Okay, well, as far as the economy is concerned, I don't think it's performing nearly as well as the statistics say. I mean, there was back in about 1822, there was a British politician who said, this is Lord Canning, who actually became Prime Minister briefly. He said, I can prove anything with statistics except the truth. And it seems to me, it's just remarkable how everybody hangs on a 0.1% difference, let's say, in the RPI or in industrial production figures. And I mean, and the unemployment numbers, I mean, we recently had this ridiculous situation where they revised the number by over 800,000. And it's still an estimate. I mean, for goodness sake, and everybody's sort of running around, getting terribly excited about it. I mean, come on, let's get real. I mean, if you just look at the things that really matter, banks are over leveraged compared with their average balance sheet ratio of assets to equity. They are cautious. They see the economy not really performing. They are worried about that. They are avoiding risk. They are lending money to the government, not to the private sector. That means that in the private sector, up and down the country, you find that small and medium-sized businesses are basically going bust or shutting down simply because there is no finance available for them. And the situation is therefore considerably more, I mean, the modern term is recessionary. I would say the slump in business activity is actually a far better description than markets really believe. Now, this has knock-on effects, obviously, because equity markets in particular are wildly overvalued, following all the statistics, these wonderful statistics. The equity market is just, completely incorrectly valuing equities. So that's one thing. The effect on government spending, however, is that the government's welfare costs and it's are going to be far higher than anybody's expecting. And at the same time, tax receipts will be lower than anyone's expecting. You've got either a spendthrift president in the form of Trump or a seemingly completely ignorant far left alternative in Kamala Harris. Where's this going to go? I mean, the answer is that with a debt to GDP, which is now greater than it was at the end of the Second World War, when it hit 119%, it's now 130% plus. This is going to just get worse and worse and worse. And you're going to get a buyer's strike. You're relying on foreigners to buy your debt. They're not going to buy it. So what happens then? Well, bond yields rise. In fact, looking at bond yields recently, I mean, the 10-year US Treasury note yield has actually started. It seems to have bottomed out, and it seems to be just beginning to tickle high. I think that's going to continue. So this is not good news. I see equities down. I see bond yields up. I don't care particularly what Jay Powell does with interest rates. I mean, he's following fashion, actually. The idea that inflation is over is a joke. That's not the case at all. Yeah, what's to like? I can't think of much, is the short answer.
Yeah, you alluded to the presidential election coming up here in the United States. Is there what are the differences that you could see transpire depending on who wins come November?
Well, if you look at Donald Trump's idea of economics, basically he approaches it like a businessman. Subsidize businesses, stop competition. So this informs you about his policy against China, for example. I mean, China produces the motor vehicles, for example, better quality, more what Americans want, and at a cheaper price than can be produced by American-based motor manufacturers. So, the consumer is being denied his choice. And the idea that you've got to have protectionist measures to protect US industry, which is basically what Trump is saying, means that US industry will never get efficient on a global, compared with other manufacturing centers. He is committing, as a spendthrift as well, he is committing what remains, if you like, of US manufacturing capacity into eventual oblivion, because it will be, it's just not good for purpose. And, the idea of spending the way to prosperity. I mean, it's one thing to perhaps try and do that, or find that is the result by accident when you've got a far lower level of debt to GDP. But when your starting point is 130% debt to GDP, you don't have room to do it. It's as simple as that. So that's not going to work. And as far as Kamala Harris is concerned, I mean, I think she's rather shown her colors by saying that, she's going to stop price gouging and introduce, price control. So now, I mean, all Americans can hope is that this is just pre-election rhetoric. And when she actually does get elected, if she gets elected, that she will be advised sensibly. Because it's absolutely clear. I mean, she's a lawyer and knows absolutely nothing about economics. So she's going to have some pretty good advice. And I have to say, looking at the establishment, the economic establishment in America, I would not hang my hat on that advice being good. So, it's between the devil and the deep blue sea, I fear.
Yeah, and in addition to that, we've got two big powder kegs, one in Eastern Europe, one in the Middle East. What do you think? Do you think we're on the cusp of something kinetic happening, and what does that portend to the markets?
Yeah, I think we probably are. There's a horrible case of brinkmanship being pursued by America. I mean, just look at what's going on with the Ukrainian situation. There is no doubt that the invasion into Kursk was planned some time ago. The stories that I see suggest that it's been in the planning for at least a year. The involvement of both America and the UK is obvious. On top of that, if you look at the way in which NATO has effectively surrounded Russia on its western border, roping in Finland, Sweden, Norway is already there, that was already a NATO member, all the way around, you can see that from Russia's point of view, this is incredibly threatening. Now, I happen to think that the Kursk invasion was a huge error, because what it's done is it's diluted Ukraine's ability to defend itself. It's taken troops from the Eastern Front and redeployed them into Kursk. On top of that, I understand that Polish troops, French troops, and as well as presumably British and Americans embedded in that force. It's getting to the stage where the territory there is just not fit for this sort of war. I mean, when it starts raining in that part of the world, things like, military equipment like tanks and all the rest of it just they just get bogged down, and it's absolutely hopeless. So there is definitely a fighting season. I think that they are very exposed, and I think that that Russia will probably make even greater headway on the eastern front of the Ukraine, as a result of the dilution of forces. I don't think they're quite so worried about Kursk, because they obviously knew this was happening, because they evacuated Kursk before the forces came in, the NATO forces came in. So this, to me, is something that is going to go very wrong as far as NATO, and NATO is being led by America in this. The fear is that that NATO, or rather America, will push this to the point where it provokes Russia into a nuclear response. Now, the two things I think that are worth knowing about this. The first is that in anticipation of this, Russia has obtained from its allies in Asia a loose commitment, as it were, but it is definitely a commitment to come to, to work with Russia against, their common enemies. So Russia's got obviously China, North Korea, Vietnam, and Iran, and I would guess also Mongolia, not that Mongolia really matters in this sense, all involved with protecting each other, as it were, from the combined forces of the West. So that should, in theory, make us pause to think. But that is not all. I think what Russia has made absolutely clear, and I think through back channels, is because Russia does understand that America's concerns about collateral damage in Europe are actually not that great. I mean, just think about the Iraq War, think about Syria, think about Afghanistan, think about taking out Gaddafi. We have refugee problems in Europe as a result of those policies, and they were all policies from Bush onwards, driven by America. Does America care about our problems? Do they? Hell is like, no way. So you can see that this is a crazy relationship. And from Russia's point of view, she, I think, assumes that the American strategy is to sacrifice Europe. I mean, in the European populations and individual nations, in trying to pursue its own objective. So this is a real existential threat against Russia. Russia has made it absolutely clear that if this goes on, and they reckon that Europe will be sacrificed, then Russia will have no hesitation at all in attacking America on its own territory. Mm. And we're talking about nuclear launches, if you like, from eastern Siberia. Let's just put it that way.
Or from the sea. There's a Russian submarine spotted not too long ago, not too far off the American coast.
Yeah, I mean, it's to me, I don't know. Quite some time ago, there was a film called Dr. Strangelove. I think it was a film which was done in the 70s, starring Peter Sellers as Dr. Strangelove, who was this sort of mad ex-German scientist. It was based on Werner von Braun, the Nazi scientist who designed the V-2 bombers. But this sort of approach by the security and defense forces in America, which just hasn't changed. I mean, it's just, we're going to beat the shit out of the bastards. That's the sort of approach. And it just has not altered at all. It is immensely dangerous. I was also thinking there's another aspect of this, and there's obviously the Middle East war. Um, there is no doubt that Netanyahu wants to get America in on her side, basically to attack Iran, or if not attack Iran, and neutralize her power, as it were. Now, we have two carrier fleets, apparently, in the Eastern Mediterranean. It is worth noting in this context, going back to Russia, that the Ukrainians knocked out the radar defense capability to the south of Russia, sort of north of Korea and along the Black Sea coast, so that aircraft from those carriers could actually attack Russia from those carriers. At the moment, we just think the carrier fleet is protecting Israel, but it is actually positioned to attack Russia. So what does Putin do to neutralize this threat? I think the answer to this is probably tied up in its relationship with Iran. What Russia did was it shipped to Iran something called Murmansk B, which is, if you like, a communications interference equipment, which generates huge, great pulses and disrupts all communications within something like 5,000 to 8,000 kilometers. This is huge. I mean, this really is huge. This is being shipped to Iran. Iran can use this to knock out Israel's Iron Dome, to neutralize it. Not only that, but from where it is, it can also interfere with the communications in those two US carrier fleets. I think that, if I was in Putin's shoes, through the back channels, I would let America know that if she attacks Russia, if she escalates the situation against Russia, then she will unleash Iran against Israel. And I think that's probably the most effective deterrent to America, as to, she would then have to try and find a way of backing down, as it were. And how America backs down from this then becomes America's problem, as it were. Getting back to your basic question, I think we are at an extremely serious point in world history, which could go into World War III, and it could escalate into nuclear. It is thought likely by specialists who follow this very, very closely that Russia could well have launch a limited nuclear attack, say against F-16 bases in Romania and also the Ukraine. So this is something which is really very concerning, and I think could escalate even further. There's just stupidity involved in this, certainly on the West side. We have, the assumption that, the evil Putin wants to expand Russia and take over the world. He just misreads the situation completely. And I think it's willful misreading. I think it is America using NATO in its own ambition to dismember Russia. And why we are a party to this is beyond logic. It really is.
Now you're getting rumblings of Turkey wanting to join BRICS, which is kind of a conflict of interest given their current NATO membership. Do you think the likes of Turkey will eventually branch off from NATO? And do you think that might cause a ripple effect, let's say, where NATO slowly but surely begins to break apart as other countries who see no interest in prolonging their involvement in this kind of just say, peace out?
Yeah, the timing of your question is apposite because in recent days, it's been noted that Turkey has applied to join BRICS. Now, what is interesting about that is that there is no doubt in my mind that Turkey, as a NATO member, very definitely has decided that its future is in Asia, not in Europe. Apart from anything else, the Europeans have rejected Turkey's overtures to join the European Union. I mean, the French have vetoed it basically because they have got enough, if you like, of an Islamic problem without having, Turks having free entry into France as well. So, having been rebuffed, as it were, Erdogan is now looking to the east because you've got the Turkic people going all the way to the north of what used to be Tibet, into all the various stans. And that's his natural. That's his natural. I suppose constituency in a sense. So, yeah, he's going in that direction. I think it's only a matter of time before the conflict between tightening ties with Russia and China and her NATO membership is resolved by her resigning from NATO. I mean, I cannot see how she can remain a member of NATO while she is pursuing that objective. It's an interesting point, I think, at this moment in time. And I suspect that now that she has, I'm told, applied to join BRICS or announced her intention of joining BRICS. I mean, she's already involved with the Shanghai Cooperation Organization, I think, as a dialogue partner or an associate or whatever. So this is interesting. And I think that you're going to see a schism, I think, between in NATO, if you like, with her coming off. I think there are also other members of NATO who are not entirely happy with the situation, Germany being an important one, because the NATO commitment means that she's having to spend more on defense supporting the Ukrainians. We in Britain are just absolutely gung-ho trying to support, believing in the support for Ukraine, but we do have a problem. We've guaranteed quite a lot of Ukraine's borrowings, and that's going sour. So that's, that's going to be another problem, the financial end of it, which nobody really is talking about yet, because Ukraine is now defaulting on its debts, and the debts are quite considerable.
What is that? What are the ramifications of that?
Well, the ramifications of that are that very huge amounts of debt are having to be written off. As I understand it, the most recent position is that there has been a sort of broad agreement, if you like, at a national level, as it were, and involving people like BlackRock and so on and so forth, that instead of a 20% haircut, that the Ukraine should try for a 37%, I think it is, percent haircut. Now, it is yet to persuade the bondholders to accept that. So the bondholders are in this situation where if they accept that, are they going to actually get paid the balance of 37%? Maybe not. In fact, I think it's extremely unlikely. So, this is going to end up, I think, a real problem with losses in Europe and also losses in the UK, sterling-wise. Now, we've got in this country, we've got a budget deficit, and government finances are in a pretty bad mess, just the same as they are in America. You add this one into it, and we need it like a hole in the head. So I think really, in summary, the whole of the Ukraine situation is going wrong, and it's not just on the military front, it's also on the financial front.
And do you think the markets have priced all this in? I mean, you could maybe make a case of the gold price having priced some of this in, seeing that's making new all-time highs fairly frequently now. But oil's still down in the lower 70s. And the stock market is continuing to rip higher. So is the market just sleepwalking through this or what? What do you think?
I think it is sleepwalking through it. I mean, we like to believe in efficient markets, but the markets are not efficient. They are interfered with by the authorities hugely. I mean, interest rates being the primary weapon, if you like, of choice in terms of managing markets and market expectations. But I mean, just look at, gold is hitting new highs. What's the interest in Western financial markets? None whatsoever. I mean, it's It is extraordinary. I don't think I've ever seen a security or anything like that entering new high ground, not just recovering, but new high ground with no investor interest. So
Yep.
what's going on? This is crazy. And if you look at mining stocks, I mean, they've been left way behind. There's no interest in them whatsoever. I mean, there are a few funds are beginning to sort of nibble, if you like, and buy, sort of invest in some of the big established producers, but there's absolutely no attempt to discount gold going to 2,500 and looking like it's going higher. The markets are completely broken. So I would not look to markets to value things, to discount things according to theory, which they should be doing, but they're not. They really are not. And the amount of propaganda coming out of the West about Ukraine and Russia and all the rest of it seems to have completely misled everybody in markets. There's no acceptance, if you like, of risk that's going on. I mean, I think if there was a sudden concern about what was going on in Ukraine, Russia, and all the rest of it, I would expect to see the euro being sold down very heavily for dollars, at the very least. No evidence of that at all. None whatsoever. So, I think that answers your question, I'm afraid.
Yeah, why do you think that is though? Why are we sleepwalking through all this stuff? I mean, surely the investor class, like this, quote unquote smart money, should have enough wherewithal to see everything that you and I are seeing. So, but why have they essentially not taken action?
Well, the answer is the money is not smart. If you, you have got an investment management cohort establishment who just basically are an extension of government. It believes everything that government tells it. Government steers it. I mean, just look at mainstream media, for example. Any mainstream media which doesn't follow the government line, doesn't toe the government line, finds it's cut out of the loop. No editor can afford that. So it goes along with it. And it's far easier if you go along with it. If you're going to go along with it, just don't think it. Don't overthink it. Just go along with the government says. I mean, when I read a supposedly sensible broadsheet paper like the Daily Telegraph, that's absolutely full of stuff which is obviously fed to it by the Defense Department and by the security services. It's all complete nonsense. So, and okay, you do get in the investment management industry some people who are independent thinkers, but they have a problem. It's all very well being an independent thinker and knowing how broken the whole system is, but you have to play a broken system, which basically means you play by the broken system's rules. And so, you get some really good guys, some people that you and I would listen to with great respect. But what are they doing? They can't buck the system. Don't buck the system because you won't get anywhere. They are probably at best ready to switch around very, very quickly when things deteriorate, when they really do start deteriorating. But for the moment, values are being driven by the mainstream media, by the investment mainstream, by government propaganda, and don't buck it until the moment comes when the whole thing starts falling apart. At that stage, you buck it. If you're really clever, you can analyze the situation in advance and you know exactly what to do when it happens. And I think I would put some of the better names in investment management very much in that category of understanding the situation on that basis. I
Where
won't
do you see?
mention names.
Yeah. So let's kind of hone in on gold now for a second. We did talk about gold in passing, but I want to spend more time on it. Where do you see the price of gold heading from here? So we've alluded to the fact that it's been making new highs almost weekly now. Is gold overstretched, or is this just getting started? Given the fact that there's really no retail interest whatsoever, and it seems to be purely driven by not even institutional buying. It appears to be more central bank buying. So, how much runway do you think we still have in this gold market?
Okay, well, the most important thing to understand is that it's not gold rising, it's paper
Mm,
currencies falling. Once you grasp that, you
right.
know that the idea of forecasting a future gold price is completely pointless. Really, what you're looking at is the relative speed at which currencies lose their value. Now, let's look at the dollar, for example. The dollar, as I said earlier, has a debt to GDP ratio in excess of 130%, and it's going to go worse than that. Let's put a little bit of gloss on it. The Chinese are sellers. Now, it's important to note that they've been buying gold, but they're not really buying gold. What they're doing is they're getting the hell out of dollars. Japanese are also sellers. Now, in that case, it's not the government, but it's the investing institutions, insurance companies, pension funds, and so on and so forth, who, just like hedge funds in the US, have been indulging in a carry trade. They've been getting out of negative interest rates, now just positive, into interest rates of 5.4% in the US. So where they went out along the yield curve, they now have big bond losses, just the same as we saw a few of the regional banks went belly up, just the same as various other global investors who have huge, great losses. And there was a bank called the Northern Chicken Bank, which was a sort of agricultural come fishing cooperative bank. You know, it's the head of a network of these cooperative banks, which declared losses on its bond portfolio, all in America and Europe, and it said it's going to have to wind down its position. But Norinchuku, I mean, the management, I mean, the statement they made seemed to me to be absolutely bizarre. They decided that what they were going to do was to invest in bonds which were higher yielding. And I sort of think, hold on, you know, these guys have just got no idea whatsoever what they're doing. But I'm afraid it is quite prevalent in banks. You know, they don't know what they're doing half the time. Um, so, but getting back to the relationship between paper currencies and gold, is the paper currencies going down, not gold going up. Now, having said that, a flood out of paper currencies into gold will, in real terms, let's say measuring gold against commodities, raise the price of gold. We're already seeing this compared on a narrow sense with oil, but oil is actually quite volatile in terms of its price, and a lot of that volatility actually comes from the currency side, from the dollar rather than just from oil. I mean, you only look at a chart, if you like, of the price of West Texas Intermediate from 1950 to the current day, measured in dollars and gold, and you find the price in gold is roughly 30% lower, whereas the price in dollars has been as high as $140. I mean, it started off at $2.53, been up to 140. It's been down. It's been even negative at one stage in, I think it was April 2020 because of storage problems. I mean, the volatility that these currencies impart on, you know, basic commodities and energy is just absolutely, it's just not understood, actually. So, you know, gold, if you like, it's not that gold rises in value. It is that the paper currencies, which are unanchored and depend entirely on the faith in those currencies, the faith in the government that issues those currencies. So I have to ask you, I have to ask all the, you know, all your viewers, how much faith do you have in the dollar, given that it is backed by the US government?
Yeah, gold. I mean, the way you framed it, it sounds like gold is the anti-currency play. So betting
Well,
against, right?
yeah, no, I go a lot further than that because throughout history, gold has been recognized as money. And as John Pierpont Morgan put it in 1912, and the rest is credit.
Mm-hmm.
You know, and this was actually originally formalized, as far as we're concerned, in Rome's 12 tables or 12 tablets, which were issued in 540 or 49 BC, before Christ. Um, the next 1,000 years was spent by various jurors refining our understanding of law when it came to the difference between money and credit, which incidentally was laid down in the 12 tables. And that was embodied in Justinian's Pandex around about 550 AD, so 1,000 years after the 12 tables, reaffirmed in the Greek language in the Basilica issued from Constantinople. Now, the important point to realize is that the inheritors of the Roman Empire were all the nations who ended up colonizing the world from 1700, well, really from 1592, when Columbus sailed the ocean blue, as Fat Swallow put it, onwards. So in everybody's common law, money is gold, silver, and copper, and the rest is credit. Now, the only stuff that central banks hang on to or accumulate is gold. They don't accumulate silver except for coinage, which they no longer do because it's even that's driven out. So you can see that in our common law, this is actually stated. It is also stated in the Constitution, the U.S. Constitution. The difference between the two. So for President Nixon to turn around and say that we're suspending Bretton Woods, and for the U.S. Treasury then to embark on a propaganda campaign, eventually getting someone in a sort of to say that gold is no more than a pet rock, which I think was the case under Bernanke. I mean, that is propaganda. It is not the law. The law is simple, and that is gold is money, the rest is credit. And the reason this matters is that gold is money internationally. Credit is a domestic affair. And if you're going to rely on foreigners to invest in your credit, then it has to be anchored to money. In the case of the dollar, and therefore the rest of us, it is no longer anchored to money. And therefore, we are exposed to conditions which can be cataclysmic. I mean, with the situation, it could evaporate tomorrow. It's a collapse of the system cannot be ruled out. And I think if the collapse happens, which we hope it doesn't, then it is likely to be the fault of the dollar. And I think the fault of the dollar, not only that, but you've got to sort of start thinking about who's got the gold, who's got the money, who hasn't got it. And I can tell you that China and Russia have got the gold. America, well, they had great difficulty delivering gold, which was meant to be held in custody, earmarked, as the technical term is, for the Bundesbank. And they turned around and told the Bundesbank, no, you cannot come and audit your gold. We won't let you in. And not only that, but if you want to have a small portion of it returned, it'll take us 7 years to return it to you. I mean, come on. They didn't have it, is the short answer. And it frightened the Dutch to the point where they decided, right, we better get all our gold out of the New York Fed because there's obviously something very, very bad going on there. And the New York Fed realized that it had to scrape everything together in order to return, I think it's something a bit over 1,000 tons to the Dutch central bank. They don't have it. I mean, this goes all the way back to the carry trade from the early 1980s through to the mid-1990s, late 1990s, whereby gold was leased out by central banks, or rather, the Bank of England and the New York Fed operating on their behalf. Gold was leased out to people who, or banks, who would take the gold, sell it in the market, for dollars, take those dollars and invest them in US Treasury bills, say maturing in 6 months. The leasing cost was less than 2%. The return on the T-bills in the early 1980s, you were looking at about 8, 9, 10%, falling to about 6, 5% later on in the process, leveraging it up even. And where did the gold go? Well, an analyst called Frank Venerosa reckoned that something between 10 and 16,000 tons was involved, bearing in mind that 16,000 tons was more than half the total supposed amount of bullion held by the central banks in 2002. The way he put it is it's now adorning the necks of Asian women. Now, I actually think that where it went to China, because I know that the Chinese were buying it at that time. Now, this was not generally known at the time at all. It's only by subsequently working things out that I've been able to establish that. So, the problem that America now has is that she can't go back onto a gold standard. She can't. I mean, apart from the fact that she would have to alter her, sort of complete economic approach. If she wanted to, if she was going to be driven back onto a gold standard by events, she would have enormous problems because, first of all, there's 11,000 tons allegedly held on behalf of other central banks, earmarked for those central banks in the New York Fed. And secondly, there's 8,132 tons allegedly held to the account of the US Treasury, which a lot of it probably isn't actually there. I think that American policy has been a big mistake in this case. Now, I don't think there's anything America can do about it, except make the situation worse. So on that basis, getting back to your original question about where's gold going to go, it's not where gold's going, it's where the dollar is going, and that's through the floor.
Why do you think America and the greater West as a whole hasn't been stockpiling gold by way of like what China and Russia and the East has? I mean, surely they must see the same thing, or is their hubris simply so big that they actually believe their own propaganda?
Hubris is so big they believe their own propaganda. It's actually as simple as that.
Quick, nice and quick answer. What about silver? Is silver going to play a role in this currency reset?
You bet. You bet. I mean, silver at the moment is priced as an industrial metal. You've only got to look at the gold-silver ratio, which currently is in the 80s, and compare it with the days when silver was accepted as money. As a monetary standard, it was the relationship was around about 15-1. So it's not priced as money at all. If it was priced as money, it would be a lot closer to that 15-1. Now, silver is still accepted as money, if you like, in practice, virtually everywhere in the world, if people can get hold of it. The system doesn't recognize, our system doesn't recognize it as money at all. In the EU, for example, they charge VAT on silver coins and silver bullion if you take delivery. It is, I think, as an industrial metal, cheap anyway, because it's been in supply deficit, according to the Silver Institute, for the last 4 years. Well, this is the 4th year of supply deficit. Now, I just can't see in this current situation how any accumulated stocks, say by the Chinese or whoever else has strategic stockpiles, I can't see how that's going to be released to try and suppress the market, because you send silver into the market, it just disappears. I think that the bullion banks are trying very hard to get out of their short positions. I mean, the thing that's fascinating is that if you look at COMEX, look at the open interest on COMEX, it's within about 24,000 contracts of the all-time low I mean, when I say all time, I mean, I've only got statistics going back to 2006, but that's all intents and purposes. They've managed to reduce their position in silver to that extent. It's getting increasingly difficult to see how they can reduce it anymore. And the interesting thing is that in the last 2 months, they have been reducing their exposure in terms of the number of contracts, but the price has been rising. Now, I know in the last 2 days, 3 days, it's fallen, but that's just volatility. So this is, if you like, the symptoms of an enormous systemic squeeze in the early stages, I think, in silver. Now, as gold goes higher, which undoubtedly it will, I mean, just look at any chart. Look at the chart, measured in dollars, and then look at the chart of the gold's trade-weighted index. I mean, that's on a death cross. So the dollar's going down, reflected in gold going up. As gold goes up, if you like, on that basis, then I think that, silver is going to be like gold on steroids. It usually has this relationship that when gold rises, silver rises approximately twice as fast. When gold consolidates, that is the moment when silver is weak. And that's exactly what we're seeing at the moment. But the moment gold gets away from the $2,500 level, again, because the dollar is going down, then I think you'll find that silver will go off like a scalded rabbit. I mean, it really will.
Scalded rabbit. Well, hey, Alasdair, I think we've touched pretty much on the gambit of things that I wanted to talk about. Anything you want to talk about that we didn't get to?
Well, yeah, I mean, just as a sort of general point, I'm on a mission really to try and educate people about these dangers, and it's thanks to podcasts like this or interviews like this that, the word is being spread. But for anyone who really does want to follow the story a bit more closely, I do have a Substack channel, which is Macleod Finance Substack. Now, if you just Google it, it'll take you there. I think it's actually just terribly important for ordinary people to understand the line they're being shot by their governments, and how dangerous it is for them. Hopefully, knowledge helps protect them, if you like, from the worst of the situation. Because a collapse of a fiat currency is no fun at all. It means that people will be very badly hurt, and the disadvantaged in society will be hurt most. I think, just be aware, everybody, of what's going on. I think it's very, very important.
Yeah, we're living in interesting times, no question about that. So, it comes with the territory. It's exciting, but it's also worrying.
Frightening.
That's what makes it exciting, right?
Yeah, frightening.
Frightening.
Yeah. And on top of that, we have the Dr. Strangeloves in Langley propelling us into World War III. I mean, what is to like? I can't think of anything. It's not good.
Yeah. Well, hey guys, if you got value out of this content, you may have liked it. If so, be sure to hit the like button, subscribe to the channel if you haven't already. It does go a long way and it supports me a ton. And if you'd like to further that support, you'd like to see more content, even more content that we're pumping out on YouTube, then check out our Substack, capitalcosm.substack.com. We'll have the link to that down below in the description, as well as Alasdair's link down below as well. You'll get the chance to ask the experts the questions that you want to ask. That might show up on the show, but we'll have a separate Q&A section on each interview that only members have access to, as well as live streams and so forth. We'll have all the features, all the perks laid out in the Substack, link down below. And with that said, I'll catch you in the next episode. Bye, guys.